Okay guys, I'm going to look at a poll and I'm going to get to the nuts and bolts of it. And why? Well, the brainwave came into it because I'm undoing a few things in the office. And what am I doing? Well, I'm putting some new stuff for my collectibles on the other side. Who knows? I might even do you a tour of the office because I keep getting requested about how the house is getting on and what my trading setup is. But drop it in the comments if you want to see what my trade setup is. I'll show you. But let's roll the intro and we're going to talk a strange subject. And a warm welcome to one and all. Now, I've traded now coming on 20 years and as a sole income since 2017, pretty much. In 2017, my world collapsed and I did odd jobs to fund an account, but I was trading at the same time, which kind of kept food on the table. And then as it's come through, you see where we are today. So I've been through a massive journey, and it's a journey that I started in industry, and the pitfalls that you guys come across, I've lived and breathed it. Now, I was fortunate in the sense I was kind of taught properly. I wasn't taught from a YouTube video or a book or anything. It was actually my job. So I was taught the correct way. So when I'm asking questions and talking, you'll probably find I talk a lot different to what the norm is. I don't flash the cash, and I don't do that because that's just a fable. It's absolute bollocks. Right? It takes money to make money. Trust me, I've been a millionaire and I know how millionaires think. I'm not a millionaire anymore. I mean, I lost that when the factory shut. But I know what it is to have money and lose money. But I also know how to respect it. Okay. Now, when you're looking at this, most people take the easy route, and this is what we're going to get to. So let me just flick this over and I'll show you something. If you come to any one of my videos, doesn't matter what they are, click the logo and you'll come to this section here. Okay. So we'll get rid of that. And what this is the front page of the Scruffy Trader. Now on it, there is the community tab. Click the community tab and you'll be able to go through. And I'm not big on social media. I don't particularly like it too much. I find it's full of morons, even more so than what's on YouTube. So I just don't bother. But I do put bits and pieces in here and I try to connect with you guys. Now, the bit that I want to draw attention to is this. And if you're a member of the group, etc., you do find the Discord chats in here. And I do updates all the time of the videos that I'm doing. And every member gets early access to videos as well. And that's the lodge I've just booked for September. So that'll be a holiday every month this year. And you've seen it. How was it paid for? Well, it's been paid for predominantly with one of the small accounts I've been building up. So trading can help, but this is what I want to draw attention to. Where you struggle most in trading. And without shadow of a doubt, the number one part of it is entry. But when you start looking at this, you start building a picture of how people think. So stop and target was equal. Okay. It's 16%. Right. Okay. Assets 14%. Other reason. I said just drop it in the comments and we'll have a quick look, see what they are. Knowing the difference between a pullback and a change of direction to kill the trade before stop losses hit. Okay, that's quite good. When to jump ship, not quite sure what that is, but I assume it's when to kill a trade. And holding a trade to target. Well, that encompasses this one. And these two encompass this. So they're really around target and stop. But today I want to concentrate on this number here. And do drop in your comments how you feel and whether or not you want me to look at these different aspects. But why I'm looking at the entry is very simple. It's the wrong thing to be struggling with. You should be able to enter on the flick of a coin. The entry is not the issue with the trading, but most people think it is. They think they have to have the optimum entry in order to make the trade. No, you don't. The markets will move up and down any given day. So you can have two traders, same asset, entering the market on the same time. So they come into chart, and entering a market doesn't mean to say you're pressing the button. What it means is you're looking at it at the same time. So you come to market, in other words, 8 o'clock, your start of your day, and you're looking. One guy wants to go short, the other one wants to go long. The difference between the two is one of them's going to have to wait. And it's that simple. So the short guy enters, brilliant. And the long guy's going, well, where's my trade? Well, it's not here yet. You might have to wait till 10 o'clock for your trade. So entry is actually around something else. It's patience and discipline. Now, if you just want to go long in the market, but the market is pushing down, you wait. You have to wait. If you want to go short, it's vice versa. Now, why have I picked that? Because most people are looking for the golden ticket.
I want my golden ticket.
You know, the keys to the Willy Wonka factory. But what happens when you go into the Willy Wonka factory? It's fraught with danger.
Like Willy Wonka's gobstoppers.
Are you going to fall in the chocolate river? Are you going to be shrunk down on the TV? Are you going to be blown up into a massive blueberry? All these different things. But what if you were patient and you just watched what was going on? Makes you think. So when you're struggling with entry, the entry of the market is not your problem. Your discipline is your problem.
No rules, no discipline, no nothing.
And most of you don't want to hear that. They just want, well, just show me how to get in. Because that's the number one question I get. Show me how to get in. And to be honest, I can't be bothered with those people.
What?
And I'll tell you why. Because they're not looking to trade, they're looking to gamble. I'm more interested in somebody who says, show me how to read the chart. So I'll show them how to read the chart. Marking your chart is the number one thing you should be concentrating on. Number one.
Number P1.
If you know where your levels are and you know where your key pain points are, that entry becomes very simple. It also defines your stop and your target, so they become equal, or easier rather. Assets to trade, it's very simple. Trade's what's moving. If it's London session, euro, pound is a base, and then tie it into something else. They will move. If it's New York session, look to trade the US. That has to be a base. So USJPY, for example. If you are erratic with your times, trade something that's a 24-hour market. Gold, oil. Why? Because you get used to seeing the charts over and over. And then your patience kicks in because you'll know you've seen certain aspects before. And you've got a fair idea how far a market is going to move. So again, your entry is not the problem that you think you have. You think the entry is the problem. It's not. It's your homework. And you need to be disciplined enough to do it. Put your levels into place. Understand the product that you're looking at. How far can it move? How do I know that? Look at an ATR. An ATR will tell you roughly what it will move. Get a daily ATR because you want a broad stroke, not an hourly ATR. Because an hourly ATR will change hour to hour. Just there could be surges, one thing, another. Look at a daily It'll give you a good cross section and an average if you're looking at a 14 period. So that's 14 days of ATRs rather than 14 hours. Divide it by 3 and divide it by 3 again. That'll give you a baseline target, what it'll roughly be working on each wave per hour. And it might be down to about 7 or 8 pips. But that's fine, because that's what you're expecting in the hour. Helps you define your entry. Now, your entry criteria could be anything. A lot of you look at moving average crosses. Fine. But they're lagging. So by the time you understand what's going on, unless you've looked at the bigger picture, back to homework, you don't know if you're in a trend or not. And if you're not in a trend, you're going to get ripped to shreds, because that means it's sideways and it's just going to do this. No good. There is a way around it. Pick your moving average. 20, 10, 8, 50, whatever it is. And don't look for a moving average cross. Look for a price cross. And what that means is you've got the moving average on your chart, and instead of waiting for another average to cross it, you wait for the price itself to cross it.
Who'd be stupid enough to do that?
Justify, stupid.
So look at an hourly chart, have a 20 moving average on, wait for the price to break the 20 moving average, and then do it again. Okay, so that'll be 2 candles above the moving average, or below, depending on which way you're going. That'll get you in the market quicker, and it'll cut out a lot of the noise. And then look at your ATR, divide by 3, divide by 3, and then target that. That is a simple entry criteria if it's sandwiched between 2 levels. Very, very simple. How else can you do it? You can use an oscillator of some description. RSI. There are key settings. You set it at 28, you set it at 14, you set it at 5. Shows momentum of the market. Again, you can use those as triggers. Is it coming off the bottom extreme? As soon as it goes into range, that's your trigger. You can use the midpoint, the center. If it swings through it, that's your trigger. And then likewise from the top coming down. Very, very simple process. You can use a stochastic. Very simple. 1433, 532. Very, very simple settings. Standard settings. Same again. Extreme, extreme, but miss out the midpoint. That can use it. You can use an ADX. As soon as it gets above 20, you are then entering the market. But what's the one thing you need to be paying attention to? Is it worth it? So therefore you need to look to see where that cross is, or where that entry criteria is. Is there enough space above or below you in the direction that you want it to go before it hits a stall point, which goes back to levels? So if you've only got 4 pips before it comes into a level, is it worth taking that trade? So you have to ask yourself, is it worth it? Chances is no, because you might have free air of 30 pips going the opposite direction to where the other stall point is, which is where you're going to have to place your stop. Why? Because there's nothing to stop the price if it's going that direction. You've got to hide it behind market structure, which is just a fancy word of saying level. So you tell me in the comments. It was just because I was glancing at it this morning and I thought I'd come to camera and just ask the question. Tell me what your entry criteria are. Tell me if you think what I've said's right. And I'll go to camera and I'll pull up a chart and I'll do it in front of you. And I do it all the time. I do for the squad all the time. Say, how do you want to trade this? And they'll say, well, we're going to trade the US this afternoon. Right, fine. We'll go to market and we'll pull out 50 quid or 100 quid, whatever it is. And we do it. Trading ain't difficult if you apply patience. Something for you to think about on a Sunday. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.